The meme coin Pepe on the Ethereum chain has performed quite nicely in the last month. The question is, can this rally continue longer? When I looked at the on-chain analytics, I found something that might surprise you. Now here's the appreciation in the last month. We're up 77%. Pepe is the third largest meme coin across all chains. It's got a market cap of 5.6 billion. Now, is there a chance that we could flip Shiba Inu and make a 2x? Is there maybe even a chance to get close to Dogecoin and make another 5 to 6x? Now, Pepe is the largest of all tokens on the Ethereum chain. It's got a liquidity of 50.8 million. That's more than 3 times place number 2, which goes to Memecoin. Now, a lot of this price appreciation is actually not related to the token itself, because there was a massive tailwind, and that was Ethereum. Ethereum during the same time went up by 58%. Now, why does that matter? It matters because most altcoins, including Pepe, is directly linked to Ethereum. The liquidity on-chain is directly connected to the ETH price. So what determines the price on-chain is the ratio of the Pepe coin to wrapped Ethereum. Now, if Ethereum goes up by 10%, then automatically Pepe goes up by 10% as well. There has to be 0 trades for that to happen. There is a direct linkage. The ratio between the two assets determines the price. Now let's have a look at the on-chain metrics. There's more than 400,000 holders on-chain, but not all of those holders are created equal, right? Some of them might just own a few cents worth of the token, while other wallets might hold hundreds of thousands of dollars worth of the token. There's clearly quite a bit of trading activity. So on the left side, we see the number of buyers and sellers over time, and the attention comes in waves. It makes sense to buy when attention is low, when there's not a lot of buyers and sellers on a day, and it makes sense to sell when attention is very high. The ratio of buyers to sellers tends to be somewhat constant. But what I think is the most important data in this video is this here. It's the number of retail investors versus whale investors over time. So for a wallet to be counted in the left chart, it has to hold at least 75 million Pepe tokens. Now at the current price, that's roughly $1,000 worth of the token. It's 750 million in the middle, so $10,000, and 7.5 billion on the right, or $100,000 worth of the token. There are almost 2,000 such wallets. Now what's interesting, the number of retail investors isn't really changing over time. The number of medium-sized investors tends to rather trend down, and the same is true for the whales. So how is it possible that we see the price go up that much and slightly outperform while there's no support by either wallet cohort? Nobody seems to be buying. How can the price go up? I think the answer lies in short-term leverage on the price. The price discovery actually does not happen on chain anymore. Instead, it happens on the perpetual futures market. So in the last 24 hours, we saw spot trading volume of 350 million on Binance. If you compare this to the perpetual futures market, that's only a fraction. The perps had 1.5 billion worth of trading volume. So this is where really the price discovery happens. It is the levered bets on the price. And when we look at the data of the perpetual futures, I get the impression that Pepe is a ticking time bomb. What we've got over here is the Pepe price in yellow and the open interest. So how many bets are there currently on the price in green? There is somewhat of a connection. The more open interest there is, the higher the price goes. But just have a look at this. The price did not appreciate as much as open interest did over the last year. So there was more and more leverage building up in the system. At the same time, we do not yet see that many liquidations. So people are very confident betting on the token, and they tend to, on average, take the long side. So the longs have to pay the shorts in order to get more exposure. But the risk really is when people get more bullish around Pepe. If suddenly there are more longs and the financing costs to get long exposure on the perpetual futures goes up again to the levels of end of 2024, then the price can decline massively, as we've seen in the past. So that drop from top to bottom was 78%. The market hasn't yet heated up enough, but there is a lot of inherent leverage in the price, and there is not a lot of interest in the token. I would not be surprised whatsoever if this video, despite Pepe being very large in market cap, does not get a lot of views. Just compare the number of views on this video to the views that we have on Memecoin or on Dogecoin. It's probably going to be much, much less. Again, because nobody is buying the token. The only reason why the price is going up is because of leverage. There are some market makers that play around with the token, but as leverage builds up, there is more and more risk in the price. And then at some point, things might feel like a rug pull if we see the crash. Let's see how this video ages. I personally stay away from Pepe altogether. I don't want to bet on rising prices. I don't want to bet on falling prices. It's simply just a player versus player game among the market makers, among the best players in the entire space. Now, some people might make the argument that all of this analysis doesn't help at all because markets are efficient. But I tend to disagree because it's people that make markets efficient. There are clearly winners and losers in the game, and the winners tend to continue to win. So it's not just a game of luck, it's a game of luck and skill. And the nice thing about crypto is that we've got much more data in this market compared to other markets because every transaction is publicly recorded on the blockchain. But very few people actually use that data properly. And that's in the end where winners and losers are born. People that don't look into the details enough, they tend to lose over time. That's the vast majority. Now, the charts that you've seen in this video come from a tool that I've developed myself on top of the Dune Analytics platform. It's part of the premium membership of this channel. There are two dashboards. There's a dashboard for Ethereum related blockchains. So those are the ones we can analyze. We can plug in any token into this tool and then we can see how many large holders are there, how many small holders are there, how many new users enter a token, and how many buyers and sellers do we have over time. It's also always useful to look at the token ownership, right? Is a token mainly held just by the whales, by the people that have more than $100,000 worth of the token? If that's true, it's potentially, especially if that happened forever, a quite dangerous token. And so this is how I think about this fundamentally. The target with trading and with investing is to be better informed than the average, to be the person that makes the market efficient. If we are better skilled than the average person, then we should over time also make positive expected value bets. That means that not every single trade will be positive, but on average, we should make money. Again, because we can estimate the probabilities better. We can see the dangers and the potential upsides better. Now, I have made more than 100 tutorial videos on various topics within crypto. How to do on-chain analytics, how to build a Dune dashboard like we've just seen. But of course, you also get access to the dashboard itself. Also about risk management, about how to properly use leverage, if that's your thing. All kinds of videos. Feel free to check them out. The newest video is this one, how to use perpetual futures and how to use the Hyperliquid platform to beat others. The videos are posted on the website, but they're also posted directly in Telegram. And here's the feedback to that tutorial. Feel free to stop the video and read through this yourself. But of course, we also need to start somewhere. And so I'm personally, of course, sharing my own trades as well as I open them. Of course, I can't share the newest trades here on YouTube, but have a look at this. This is on March 3rd. I'm adding another short, Cardano, relative to the US dollar. And the explainer was in a premium update video. So I publish premium update videos every 3 to 4 days. I then added more exposure on the 11th of March and I then closed it on the 7th of April. So of course, not every trade works out that well, but Cardano went down relative to Bitcoin by 36% during that time. And so with this membership, I want to do both. Of course, I want to make it profitable very quickly. That's why I share my trades, but I also want that the vast majority, at least of the members, takes the time to learn as much as possible. That in the end, you might not even need the membership anymore. You can make your own profitable trades. Now have a look at this. This is where our members share their winning trades. If you use the right leverage, if you know how to do proper risk management as well, you can make hundreds of % in a single trade. It's all about being prepared and knowing the data better than most other market participants. So feel free to check it out. It's currently $125 US per month. The price has been reduced because currently the attention on crypto is still relatively low. Once Bitcoin hits new all-time highs again, then I might go back to the 165. But the 125 is locked in for everybody that signs up now. So when the price increases, when you're still subscribed, your price will not increase. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. There's also a link to Premium directly here on the right. Just click on that. It will lead you directly to the website. So see you next time. Cheers.